Hi everyone, welcome to today's webinar. My name is Josh Epstein. I'm the marketing specialist for TDA Perks. Joining us today is Simon Walder with New Perks vendor ERC Specialists. Simon will cover the $26,000 per employee stimulus your practice may have missed out on and how you can still claim this fully forgiven tax credit. So Simon's team quickly has helped nearly 400 dentists claim the employee retention credit. In total, they've claimed over $1 billion in total refunds for their clients. So Simon will offer live Q&A following the webinar. So make sure that you do type your questions in that box there on the right, and we'll get everything answered for you. So you're going to find out today what the employee retention credit is and who it's for, why so many practice owners just don't know about it or have been incorrectly told that they don't qualify, what the funds can be used for, what ERC specialists have been able to do to help over 90% of applying dentists who that receive the credit, common myths surrounding the credit, and how you can claim the credit for your business. So before we begin, I want to mention that if you're not familiar with Perks, we endorse over 20 different vendors that are available to assist you in your practice, from compliance to supplies to insurance and marketing, financial and more. So be sure to check out the resource section of our Perks site, which is www.tdaperks.com. We offer all of our archived webinars. This webinar is going to be recorded too in case you miss any of it. We also have the latest TDA journal articles in there as well. Another announcement quickly is I just want to make sure everyone's aware of the Tda Dental Concierge App, which is a brand new TDA member benefit. It was brought to you by the TDA, and it's a totally free member benefit. And the app simplifies meeting your TSBD ECE requirements and audit submissions. Created TDA members, it enables you to track your CE that you've completed and see what you lack. You can get high quality courses at a low cost, and you can easily transfer that information over to the Texas State Board of Dental Examiners to comply with its auditing process. So definitely urge you to check that out. And with that being said, Simon, ready?
Yes, I'm ready to go.
Okay.
So like Josh mentioned, this is the $26,000 per employee refund you may have missed and how you can claim it webinar. So, if you own a practice and have W-2 employees, this presentation is for you. And the information we're going to present is pretty straightforward. This is a black and white credit, and we're not going to be exaggerating any aspects of the credit. So I'd like to thank you guys for taking the time, and thanking TDA Perks for giving us the opportunity to share. I think Josh did a great job kind of giving the overview of what all we'll be covering, but I'd ask you or say that it's important that you don't pre-qualify yourself and just go through the process I'm going to show you. Forbes has estimated that 70 to 80% of businesses that qualify for the credit have missed out, and this webinar will ensure that your business is not one of them. So I challenge you to participate and follow along. At the end of the presentation, we're going to take questions, so write them down. We'll take them at the end, and if we don't have time, we'll make sure and give you a call or email you with the answers to your questions. So a little bit about myself. I've spent 9 years in the dental industry with Henry Schein and Benco, and I joined ERC Specialists recently. I had been helping tons of doctors all throughout Texas claim this credit, and then eventually it started spreading to all over the country. So I came on board and have now been visiting multiple dental shows and whatnot, and helping, like I said, helping dentists all across the country claim this credit. And Josh Zaglowski, he's one of the founders, and he's our Chief Business Development Officer. He is going to join here shortly, but he was one of the original people that founded this this company, and he'll be taking your questions at the end. So what is the employee retention credit, or it's sometimes referred to as ERC or ERTC? It's basically a stimulus refund check for practice owners or business owners, or anybody that has W-2 employees, including nonprofits. It was created under the CARES Act as part of the federal government's relief program to reward business owners for retaining their employees. It's been amended quite a few times, and it originally came out the same time as PPP and EIDL. And originally, you were not able to double dip, but through those amendments, and one of the latest amendments being in March of 2021, you are now able to claim both. But the difference is EIDL was a loan and PPP started out as a loan, but ended up being able to be forgiven. But ERC is a refundable tax credit that comes from the Treasury Department in the form of a refund check. So like I said, if you retained your employees through the pandemic, this program is designed to reward you. So many of you paid your employees even through while you were shut down, and paid them even though they weren't working, and you did a lot of things to take care of them. So this is a great reward that's available to you for employing staff through 2020 and 2021. So the details of the credit are, this is for W-2 employees only. This is not for 1099 or contract work. W-2 employees only. It can be full-time, part-time, or seasonal. It's available for 2020 and then Q1 through Q3 of 2021. There's no limit on the amount of funding you can get from this. And excuse me just a second. Sorry about that. Josh just joined me. But like I said, ERC is not a loan. This comes in the form of a refund check. And new businesses are also eligible to claim a portion of this credit for Q3 and Q4 of 2021, and are able to claim up to $50K per quarter. So what can you do with your refund check? Well, the choice is up to you. You can use this for new equipment purchases, bonus your staff, fund your next practice, put it towards personal use. The choice is up to you. This is fully forgiven from day one, and you do not have to repay it. And the government is not going to come beating down your door asking how you use the funds. So yes, like I said, the refund check is fully forgiven from day one. So you may ask why this is a refund credit and not a grant. So Josh is sitting here with me, and I think this might be a good time for you to chime in and kind of tell the difference between a credit and the grant.
Yeah, thanks for having me, and thanks for everyone for being here. The main reason why I think we also explain why this is fully forgiven is because PPP was a loan that was forgiven later. If you remember that, EIDL is a loan, and so this is not a loan. This is, I almost call it like a rebate. But the reason why they call it a credit and not a grant is because a couple things. If you have a grant, you have to specify what you're using your money for. A credit, that's why they call it credit. In addition to, if you have back taxes, because this is through the Treasury Department, aka the IRS, they'll keep the money and they'll send the difference. And you might think, well, that's kind of crappy, but people that have had back taxes and clients that we've helped, they've actually loved that, because this was newfound money to them to help, and the whole purpose of the program is to help stimulate the economy. And so yeah, but that's why they call it a credit, not a grant.
So qualifications for the program. Qualification is based off business operations affected by various government actions taken to stop the spread of COVID-19. So the first one, and you only have to have one of the three. You do not have to have all of them. And if you have, the more you have, the more percentage of the credit you can get. But the first one would be full or partial shutdown due to local, state, or federal mandates. The second one would be decreased revenue, and there's a couple metrics on that I'm going to cover shortly. And then the third one would be if you had supply chain disruptions that affected your business. So where does the 26,000 come from? Well, it comes from in 2020, you were able to claim 5,000 for the whole year. And in 2021, you were able to claim 21,000. And that 21,000 came from being able to claim up to 7,000 per employee for Q1 through Q3. So some of those amendments were that in 2020, you had to be able to qualify, you had to have 100 employees or less in 2019. But then in 2021, they amended it, and you were now able to claim it if you had up to 500 employees in 2020. In 2021, excuse me. In 2020, the revenue reduction was based off a 50% decline in revenue as compared to 2019. That they amended that in 2021 and now said on a quarter by quarter basis. So for example, if you took Q1 of 2021 and you compared that to Q1 of 2019, and if you had a 20% in decline in revenue for that same quarter, that would be a qualifier. And then it was the same metric for Q2 and Q3. And then they also added if your business was disrupted by supply chain issues. So, and I'll give you more examples of supply chain issues. And then, like I said, for new businesses that started basically after COVID, they can qualify for up to 50,000 per employee for Q3 and Q4 of 2021, as long as their revenue was less than $1 million in 2021. So we put some examples that the typical dental office will qualify from. And if you just had one of these are not the only examples, but if you just had one of these, you would able to get at least a portion of the credit. So the easiest one for a dental office to make them qualify would be if your practice was forced to shut down due to local, state, and federal COVID mandates. Well, that's pretty much every dental office in the state of Texas and the United States. And then another one that really affected Texas dentists that also made them pretty much every dental office qualify is being forced to hand scale versus use a Cavitron, which a lot of times when I talk to dentists, they say that that limited their hygienists, the pace they were able to work, and they weren't able to see as many patients throughout the day. So that altered their schedule. So that's an easy one. Having capacity restrictions, if you weren't able to get the supplies you needed. So there was tons of issues with gloves, masks, protective gear, and other suppliers had issues. So if you weren't able to get the supplies you needed to perform your job, that would be an easy qualifier. Or a major thing that's plaguing the dental industry right now is equipment. So if you bought a chair package, and typical lead times used to be 4 to 6 weeks, well, now they're 4 to 6 months. So that is a perfect example of a qualifier where supply chain issues affected your business. Or if you did a renovation or you're building a new office, well, permitting was a nightmare, construction was a nightmare, and those delays could also be an easy qualifier. And then, like I mentioned previously, the revenue declines as well. So why hasn't your CPA done this? Josh, I think this would be a good one for you to cover.
Yeah, it kind of comes back to when I was actually trying to have my CPA look into this. And my CPA is the same CPA that does for Robert Kiyosaki. Mostly because, number one, CPAs don't do payroll. I always tell people, don't get upset or why hasn't my CPA or a tax professional told me about this, is mostly because 90% that I've seen of CPAs or tax professionals, they don't do payroll, right? They do your 1040s and your 1120s. We're amending your 941s. And then, back when I was looking into this program, and that's the reason why we started the company, is because this was amended in March. This was in April of 21 when I was looking into it. Payroll companies weren't doing this either, because payroll companies, well, they'll do your quarterlies. It's an active payroll. They don't amend your 941s. And so there was like this weird gray area that no one was helping the business owner with this. And then just like Simon said, this has been added and amended since it first started. And so it's made it a lot easier for the business owner to obtain this credit, for their business. So, but that's the main reason why it's the CPAs and the tax professionals and the payroll companies. That's the reason why they're not doing it. I do know, ADP, I think in Paychex, they're now having a third party, but we're getting a lot of customers that just, they're not getting the full amount of credit as possible. And so, but and I say that because they're not actively doing it. They're just referring it off. So.
Cool. So there are a lot of myths surrounding the credit, and many of those come from previous legislation, or either their tax professional or somebody they've heard misinterpreting it. So the first one would be, or that I typically hear, is that I don't qualify because I already received PPP. Well, that was amended December 27th of 2020 through the Consolidated Authorization Act that modified ERC and allowed you to be able to claim both. And then the second one was, I don't qualify because my revenues went up. Well, that was modified in March of 2021 and no longer required or no longer disqualified you if your revenues went up. There were other factors. And then the third thing is that many people just think, hey, this sounds too good to be true. It's got to be a scam. So I'd even encourage you, if you just go to the IRS website, there's plenty of stuff on the employee retention credit. I would say you can dig into it, but just like everything else with the government, they do make it pretty confusing. There's over 280 pages of legislation on this now. But like I mentioned, the Forbes article earlier, the IRS, here's a direct quote from it. The IRS management anticipated that approximately 70 to 80% of small to medium businesses, as well as tens of thousands of charities, were good candidates for the ERC. The reality is, to date, the actual number of businesses and charities applying for the ERC is far below that. Small to medium businesses, as well as tax exempt charities, are leaving billions of dollars on the table. So why ERC specialists?
Yeah, so why ERC specialists? We went from 6 partners to almost a little over 200 employees. So far to date, we've done 1.5 billion in credit. We are now little under 10,000 companies we've helped with this. We think by the end we should triple or quadruple that number. But the biggest thing is, it's just something we specialize in. I use this example all the time. It says, if you're going through a divorce, you don't call a real estate attorney to defend you. You call a divorce attorney. We specialize in this, in claiming this ERC credit for the business owner, trying to get the most amount of credit possible for them. So it's a win-win situation. We have an amount of CPPs, certified payroll professionals, on our team that are taking care of this credit. Because some people, I say that because some people say, oh, well, how many CPAs do you have? Well, I don't need a CPA. We don't need CPAs, we need CPPs, because this is a payroll type of credit. And so we handle that for the customer, and we just make sure we get the most amount of possible. And it was made by business owners for business owners.
And some of our credentials, these are some of our just main staff that oversee their divisions.
Yeah.
And their expertise is go from forensic accountants for the IRS to members on the board of the American Payroll Association, to we brought some tax law firms in-house that specialize in tax litigation. So we've really brought a blend of expertise, and that's where you really see the difference versus a one-off, either accountant or lawyer trying to follow this. We've put a blend together that really helps maximize our customers' credits while staying completely within compliance of the program. So our process, we've made this very easy. I've heard plenty of horror stories from PPP and EIDL on claiming it, but we've made this very simple for you, the end user. So the first thing, you go to our website, www.claimerccredit.com, and you'll do a quick questionnaire. And from there, once you finish the questionnaire, you get directed to a new screen, as well as you get sent an email where it has a button to launch you to a secure portal to upload a few documents. From there, we basically take over and handle all the rest of the work. We'll evaluate and analyze your documents, and then we'll send you an analysis based off everything you submitted us in the questionnaire you've done. And once you authorize that, we'll file that to the IRS and you will receive your refund check. So to go through that, this is a view of our website. Right at the top, there's a begin qualifying button, or if you scroll down, it's right here, and there's tons of other resources on the website, but that will launch you to the questionnaire. That should take you roughly 5 to 10 minutes to get through. It's a pretty quick questionnaire. It's a little helpful if you have your quarterly revenues in front of you for the last couple of years, but if you didn't experience revenue declines, then it'll especially just take you a couple minutes, and you don't need those handy. Then, like I said, you'll get sent an email where you just click this upload your files button, and you'll get launched to this right on the right is an exact look of what the portal would look like. You just enter your company name here, and then it will ask for a detailed payroll report. We've made that process super simple. We have a drop down box right here where you just click and select the payroll company you have, and then will automatically populate the exact directions. It's in a quick 3 or 4 step process on how to export the file needed in an Excel file. And then if you did have revenue declines, we'll ask you for P&L statements as well. Sorry, I skipped one down. We'll need your 941s. That's typically in your payroll software under like tax documents. And then if you did have revenue declines, like I said, we'll need a couple P&Ls, and then we just need basic PPP info. So did you get PPP? If so, did you get draw 1 or draw 2? How much? And the date received, and was it forgiven? So pretty simple. That process should only take you probably another 10 minutes or so to get everything over to us. So in total, our goal is to get you done and through and uploaded in 20 to 30 minutes through the whole process for your time. And then we analyze your documents. We look at the shutdown orders in your area and the supply chain issues you might have occurred. And then we analyze and find the maximum allowable credit for your business. We will then send you an analysis. And once you authorize it, we will file to the IRS on your behalf, and they will issue a refund check. So payment options, obviously, what does this cost me? We've made this very easy. Our most popular option is we take 15%, but we don't take anything until you receive your check. So the IRS has a little bit of a longer backlog right now. It's about 6 to 8 months to receive the funds. So we knew that would be a bottleneck for a lot of businesses, especially if they were hurt by COVID. And so we said, we'll do all the work. It takes us about 2 to 4 hours per employee you have on staff, but we'll do all the work and we'll file it for you, but we won't require anything until you actually get the funds. So it's just kind of a no-brainer situation, and it's found money at that point. And then we do offer the opportunity to get a little bit of a discount where if you want to pay upfront from the day we file it, we'll take 10%. So we'll give you an extra 5% discount there. So now's the time to act, though. Just like PPP, these funds will run out eventually, and when the program is done, the funds are done. And the IRS backlog continues to grow longer. Originally, we were thinking it would take roughly 4 months to get the money, and that's now grown to 6 to 8 months. So the sooner you get in, the sooner you get your funds, and it ensures you could still get the funds while they're available to you. And here's just a few of the local, like I said, I'm in Houston, so a majority of the doctors that I've helped recently are in the Houston area, so in a lot of the surrounding suburbs. Here are just some of the few examples of practices that I've helped. All of these we have filed the credit for. And so, like I said, really nothing to lose. We have expert analysis. We don't require upfront fees to file your claim, and there's no obligations for you to go through our process and do the questionnaire to see what you qualify for. If you decide to not move forward once you receive your analysis, we are not going to send you a bill for that. So that's all I have for you. I thank you for the time, and I would encourage you to head over to our website, www.claimerccredit.com. And now I want to just open it up to whatever questions you may have.
Thanks, Simon and Josh. We really appreciate it. A lot of insight here, and it just seems like a no-brainer. Seems like a win-win for everyone. So I do have a few questions. So here's the first one. Is the tax credit considered income that will be taxed even though it is forgiven? That's from Dr. Gina Smith.
It's a great question. There will be a small tax on it. However, what this is, as an example, is let's say you paid someone a wage of $10,000 in a quarter in 2021. You've paid that payroll tax. You're going to be you can get up to $7,000 back. Like I said earlier, I like to call it a rebate. When it comes to you, number one, it comes to you with our fee, right? So if there's $100,000 of credit and the customer gets $85,000, we get $15,000 in that case. They'll have to tell their CPA that they did receive money, or their tax professional, from the ERC credit of $85,000. We've been told by several CPAs that the tax side of it will be under about a 5% tax for that money.
Okay, and all right, so another question came in, and I think you guys touched on this, but if you could just kind of reinforce and reiterate, if we don't receive any refund, how do you charge us?
We don't. That's like Simon said earlier, there's the other reason why we did it this way is because when I first started, it was too good to be true. And so rather than charging up front, that's what we did. However, now that people have been receiving their checks or whatnot, when it gets filed from our side, 99.9% of them are getting approved to the IRS. Why? Well, then, okay, what's that 1.1%? It's not getting declined. They're getting told like, hey, this customer actually didn't file a 941 this quarter, even though on their QuickBooks it shows that they have it done. They officially didn't file it, so they send us as a notice. So IRS is all about notices. But to answer the question, no, we don't charge anything if money doesn't come.
Yeah, so it just makes so much sense to reach out and to you guys and start the process. So another question that came in, does it close down, and so does the shutdown in 2020 also qualify you for the 2021 ERC or only the 2020?
Can you repeat the question?
Yeah, does the close down, so the shutdown in 2020 also qualify you for the 2021 ERC or only for 2020? So go ahead, I'm sorry.
No, that would only qualify you for those shutdowns that were March through May would only qualify you for the 2020. But a mandate that did affect a lot of dental offices all throughout Texas, that was for the whole year of 2020, was the Cavitron and hand scaling situation that slowed up the offices and definitely affected many practices' hygiene program. So even if like your revenues were going up, that there's many times, I'll talk to my personal dentist saying, her hygienist was not able to see maybe 1 or 2 patients a day difference by that. So that's an easy one where that's, even though there was a shutdown order for only a couple months, there were still other COVID mandates that took the whole 2020. So note that those type of questions will come up through the questionnaire of like what quarters were you affected and all. So it's very easy for a lot of dental offices to say that every quarter of 2020. Everybody's situation is unique, but that's very common. But everybody at least had that quarter Q2 of 2020.
Right. Okay, so I've got a few more that have come in, and if you can, a few of these you all have touched on already, but it's always good to go over everything. So about the supply chain interruptions. So can you define like an actual supply chain interruption and how that would be covered here?
You want to talk about the dentist supply chains? Okay. So 2021, that's when this was amended, saying, if someone had a supply chain or if they've had a 20% revenue reduction. The supply chain can be defined so many different ways with a business. For instance, if something wasn't coming in on time, if they had to pay more for another product that was delayed. I know we're on more of a dentist type of call, but even like attorneys, they were their supply is courthouses, and so they weren't able to go courthouses on time, and so that was their supply. So in our survey, we do ask questions to tell us more about what you can think of during your supply chain, disruptions in 2021. In addition to, if you can take screenshots of your emails from your suppliers saying, hey, things are delayed based on shutdowns and supply chain disruptions. It's not considered for labor because a lot of people would sometimes ask, hey, I just wasn't able to get labor. I couldn't find anyone to work for us or whatever it was. And so that's not considered supply chain. That's just kind of a labor shortage in that particular industry or whatnot. So the one thing with the survey is it does ask questions on tell us more about your business. If there's questions to that, my team will get with the person that applied for the survey and kind of go over those with them. So I think that's kind of one of the easier things to do. But the couple that I kind of mentioned at the very first, I think are one of the top supply chain disruption qualifiers.
Yeah, so typically what I've seen or ways I've helped dental offices is if you bought a chair package or some manufacturing of different x-rays or whatnot, those lead times got crazy. So for example, like if you bought a chair package in, let's say, the end of 2020, it probably didn't hit your office until maybe June of 2021. That is easily so qualifier for the first 2 quarters of 2020, saying, hey, supply chain issues affected my business. If you did a project and you were buying, your cabinet guy was held up, the plumber was held up. I was just at the Tda Dental show and was talking to a dentist that his permitting got held up and then his construction got held up, and he's just now moving into the office when originally it was supposed to be a 6-month timeline, and that turned into a 13-month timeline, which basically made him qualify for the entire 2020 as well as 2021 based off those supply chain issues. And then there's plenty of offices that had issues with securing the supplies they needed as well. and had to buy alterations or not their normal supplies because they could only get, many dentists were all in the position of just using what they could get due to supply chain issues.
Hopefully that helps.
So yeah, and there's another question regarding that question. So how would you prove supply chain disruptions if you don't have a paper trail?
Technically, it could be a test, an attestment, and that's through the survey. We asked for that attestment to kind of explain what the supply chain problem was, because that is one of the qualifiers as well as or things that we need, and that's why the survey is for that. Is we want the business owner to tell us more about it and attest to the supply chain.
As well as that, there's you might be surprised. Many of the dealers and distributors were, a lot of the supplies there, you were getting back order emails, you were getting notifications of limits that you were able to get. Supply chain issues or longer lead times on equipment are very easy to document on our end, and I'd be happy to help anybody out with those, because all the dental manufacturers have posted their lead times. So like, for instance, it's very easy to show in 2019, pre-COVID and all, these were typical lead times, and now, here's the lead times of when I bought them, and then we'd go based off your, the date you purchased versus invoicing. So it's really easy, and I could help you out with that as well if you really were worried about it and wanted to have a folder built up just for safekeepings.
Okay, another question here, and I'm this way too. So, there's a lot of detail here. There's a lot of things that can get missed. So can I call for help and just kind of have everyone kind of walk me, or have someone walk me through the process, the questionnaire? I mean, is there a lot of support here?
Yes, absolutely. So like Josh said, we have over 200 employees internally that are helping with these credits and a full customer support. You can go on the website and there's a contact button, and you can schedule a call at a time that's convenient for you, and we'll walk you through the questionnaire if you need that hand holding or help you get your documents uploaded or answer any questions, or we're here to help you through this process and be your resource and advocate throughout the entire process. So, and then once you go through the questionnaire, you will be assigned an account specialist that will also be reaching out to you and overseeing and answering your questions. So throughout the process, you have multiple resources and people there to help you. And this is a team effort to make sure you have your questions answered, fully comfortable with the process.
Yeah,
but I would, just to recap, if you do have questions or would like to get on a call, just click the contact and schedule a call, or submit there's a place where you can submit a question as well. So if you think of something and you need answers, or you can email me directly as well, and I'd be happy to help you.
Thanks for that. Also, I want to reinforce that, ERC Specialists, they are a TDA Perks endorsed vendor. So they are vetted by board of our directors. They go through a very a long process, and again, they're vetted. So you can find out more about them too over at the TDA Perks website. If you look in the financial and real estate section of the site, you'll see ERC Specialists. You can just kind of get a little bit more information on them. If there's anything that they maybe covered that you have questions with, you can contact them at all their different support methods. And again, take a look at the website. We have all their contact information on that as well. Josh and Simon, is there anything else you'd like to add?
Oh, and just one more follow-up. I think that's good to note is we are not filing this to the IRS until we get your authorization as well. So when you go through the questionnaire and we provide you an analysis, I mean, nothing is done. So if you're worried about it or want questions answered, sometimes I've found, if you know the answers to the questionnaire, get through it. It's a lot easier to talk things through when you have a fully finished questionnaire and go over it You know, if you just have more broad questions, you know, if there's like specifics that you need before the questionnaire, then yeah, obviously reach out. But you know, we're not filing it or anything until you actually give, you know, your authorization, obviously.
Simon and Josh, thanks so much. You know, we appreciate everything you're doing for TDA members and for this benefit and service that you provide. And thank you very much for your time today. I think it was really informative. There's nothing else you guys have. I'm going to end the webinar for everyone. And again, this has been recorded, so it'll be sent out via our e-blasts over the next month. So you can actually pass it along and share it with your colleagues if you'd like. So I hope everyone has a great weekend and take care. Thanks for tuning in.
Thank you.
Thanks again, Josh and Simon.